Welcome back to Investing Talk podcast. We're really glad you could join us today. We're going to tackle a company that's, certainly been getting a lot of attention lately, Reddit. And the big question we're asking is Reddit a good time to buy right now?
Mhm.
But this isn't just, looking at a stock ticker. It's a really complex mix of growth, valuation, how the market feels about it. And we want to help you figure it out. Before we get started, though, if you're enjoying what we do here, maybe hit that subscribe button. Give us a like, leave a comment. We really do appreciate hearing from you.
Oh, and hey, if there's a company you want us to look into next time, just let us know in the comments below. Seriously, we'll look at those.
Definitely. So today, we're going to try and unpack Reddit. We'll look closely at its financials, how healthy the business actually is now. We'll talk about that soaring stock price, what the market sentiment looks like. It's pretty varied. And crucially, what are the real risks and maybe the opportunities that you should be thinking about if you're considering this one? It's quite a story. Okay, so let's start right there with the business itself. Reddit's unique, right? It's all about user content, these communities, but profitability always seemed like, well, a bit of a maybe. Now, though, the 2025 numbers look quite different.
They absolutely do. It's actually been a massive shift. If you look back at fiscal year 2024, Reddit had a net loss of, get this, $484 million on about $1.3 billion in revenue. That's a lot of red. But then you look at the trailing 12 months, the TTM, up to June 30th, 2025. And suddenly they've got net income of $216 million, revenues up to $1.67 billion. So that swing gives them almost a 13% net profit margin. Pretty impressive turnaround.
Wow, okay. From nearly $500 million down to over $200 million up in about a year. What's behind that? Yeah. Especially with those gross margins you mentioned.
Yeah, the gross margins are definitely part of it. They're running at like 91%, which is just, It's huge. It really tells you how efficient the core platform is, right? Once it's running, the cost to serve more users isn't proportionally massive. So a lot of that revenue drops down. And for investors, the TTM earnings per share, the EPS, is now $1.16. What's really interesting is coupling those margins with, zero debt.
Zero debt? Really?
Yeah, zero debt to equity, so no real leverage risk there. That creates a surprisingly solid foundation, even in this super competitive social media world.
Okay, debt-free is definitely good to hear.
Yeah.
But how do they stand out? I mean, beyond the communities, what's their actual competitive edge to keep this going?
That's the key question, isn't it? Their edge really comes from that unique user-generated content, how engaged the communities are, and the kind of specific high-intent conversations people have there. Investors are now talking less about just ads and more about things like, data licensing. That's a big one these days. And also these community-driven features like a user economy. Plus, they're pushing things like AI and machine translation to try and grow globally.
So tapping into what makes Reddit basically, but finding new ways to make money from it.
Exactly. Monetizing the uniqueness, not just running standard display ads, and expanding internationally.
Okay, but let's shift gears a bit, because the financials are one thing, but the stock price, that's been the real drama, right? It's been quite a ride this past year.
Oh, absolutely. Roller coaster might be an understatement. Parabolic is probably a better word. I mean, in the last year, it traded between roughly $37 and $230. And just recently, as of September 11th, it closed at $263.35. That was after jumping almost 8% in just one day. Yeah. And the volatility. Its beta is 2.07. So it's moving, on average, more than twice as much as the overall market. Very swingy.
So where are the key levels people are watching now?
Well, support seemed to build up around that $170 to $200 zone, which was kind of the old highs. Now resistance is, it just blew past the 230, 265 area, so it's kind of a new territory.
Right, and you see all these technical indicators flashing strong buy. But, I mean, after a run like that, what does that signal really tell you, the investor, right now?
That's the tricky part. You see strong buy, but the chart looks like a rocket ship. That usually screams overbought. The price is way, way above its moving averages, both short and long term. That suggests things are stretched. So while the momentum might technically still look positive in the super short term,
It doesn't mean it's not risky.
Exactly. It doesn't really account for the valuation underneath or the risk of a snapback. So the big question for you is, how do you square that buy signal with a stock that's already gone up, 350% plus? It's priced in a lot of good news already.
That makes sense.
Hey.
So what has been pushing it up so much, and what's coming up that could keep it going or maybe, cause some trouble?
Yeah, there's definitely been a few things lining up. Over the last, say, 3 months, you had the whole tech sector doing well, which helps. Then Jefferies, the analyst firm, bumped their price target way up in September from $230 to $300. That got attention.
A $300 target, okay.
Right. And back in August, they announced partnerships, especially one with NVIDIA, which ties into that whole AI narrative. Big buzz around that. And don't forget the June earnings report they released in July. Nearly $500 million revenue, $89 million net income. Showed growth and cost control.
Okay, so analyst confidence, AI buzz, solid earnings. Sounds pretty good. What about looking forward? What are the next few hurdles or milestones?
Right. The next 3 months have some key dates. The big one is probably the Q3 earnings. That's on November 4th. The street's looking for about $545 million in revenue, 0.50 EPS. So eyes on that. Before that, end of September, you've got quarterly ETF rebalancing. That can move stocks as funds adjust. Mid-October, there's usually some kind of update on holiday season advertising trends. That's vital for Reddit.
Makes sense. Q4 ads are huge.
Crucial. And then end of October, we get the 13F filings. That's when big hedge funds and institutions reveal their holdings. You get to see if the big money is buying or selling. Beyond those, there are always rumors floating around. New AI stuff, international pushes, maybe even an acquisition or new premium features, speculation, but it fuels interest.
So lots of potential good news. Confirmed and maybe speculative, you'd think everyone would be piling in, but I get the feeling it's not quite that simple. Is everyone actually bullish?
No, not at all. And that's really the core tension here. You've got this huge split. On one side, you have the momentum crowd, maybe some folks active on StockTwits, seeing the strong buy signals, the meme stock angle, the high volume. They're very bullish. But then you have more traditional analysts, some media figures. Jim Cramer, for instance, came out saying Reddit did not have the quarter, basically pouring cold water on the valuation.
So a real clash between the technicals and the fundamentals.
Pretty much. A clear divergence. You've got the excitement, the catalyst, the meme factor pushing the price up, and then you've got cautious voices saying, hang on, look at the actual valuation here. It creates a really polarized environment for you as an investor.
Okay, given all that, the growth, the crazy price action, these conflicting views, what are the main red flags? What are the big risks you need to be aware of with Reddit right now?
Well, the elephant in the room is definitely valuation. That PE ratio, over 200.
200.
Yeah. Price to earnings over 200. That means you're paying 200 times its annual earnings for one share. It's explicitly called out in research as far above peers. It just bakes in years and years of perfect execution and growth. There's basically no margin for error at that level.
So any slip-up could mean a big drop.
A very sharp correction, potentially. That's the biggest single risk, I'd say. But there are others, too. Operational risks, sector risks, like regulation around digital ads. That's a constant worry. Some reports even flag regulatory risks will crush digital ad ecosystem. That's not just Reddit, but it hits them hard. And then there's execution risk. Can they actually pull off scaling internationally? Can they make this user economy thing work? It's not guaranteed. And remember, they only just turned profitable. They haven't proven they can sustain it consistently over time yet.
Right, that makes the picture a lot clearer. What about just general market stuff? Does its volatility make it extra vulnerable?
Oh, for sure. That high data, the 2.07 number, that means if the whole market catches a cold, Reddit could get pneumonia. It swings hard. Any sector-wide slowdown in ad spending would hurt. Tighter privacy rules, same thing. And, if interest rates keep creeping up, that tends to put pressure on valuations for high-growth stocks like this. It makes future earnings less valuable today. So yeah, the growth is there, it's exciting, but the risks, valuation, regulation, execution, market swings, they're really significant. It's a challenging setup.
Okay, so let's bring it all back. After digging through all this, for someone listening, trying to decide, is Reddit actually a good buy right now? It feels like a real balancing act.
It absolutely is, and our overall take reflects that. We landed on a 3 out of 10 rating, which basically signals very high risk. Let's just quickly recap the pros and cons for you. Pros. Yeah, the revenue growth is fast. They did just become profitable. Those gross margins are fantastic. And no debt is a big plus. Plus, that unique community feel is a real asset. But the cons are pretty heavy. That extreme PE over 200 valuation is number one. There's a lot of hype and speculative money in there right now. It relies heavily on digital ads, which face regulatory headwinds. The track record of sustained profit is short. And the volatility, as we discussed, is huge, meaning big downside potential.
So who is it maybe suitable for then?
Honestly, in the short term, maybe only for traders who thrive on momentum and can handle extreme risk. You'd need to be watching it very closely long term. It's still very high risk at this valuation. Unless they can really prove sustained, diversified profitability way beyond just ads, it's tough to justify the current price for a long hold.
That's a very clear summary. Puts the excitement in perspective against those significant risks. Really makes you think about your own comfort level with that kind of volatility.
Exactly. And maybe one final thought for you to chew on, beyond just the numbers. Can Reddit genuinely take that unique community, that user content, and build something bigger? A revenue stream that isn't just ads, that really justifies the massive enthusiasm the market has shown recently? That, I think, is the fundamental long-term question.
That's a great question to end on. Leaves us all with something to consider. Thanks so much for breaking that all down, and thank you for tuning in and joining our discussion today. Keep learning, keep asking questions. We'll be back next time with another look at the markets, just for you.